Excitement is sweeping across the American airline industry as airline stocks are climbing to levels not seen in months. Both investors and market experts are buzzing, witnessing a dramatic shift in momentum that's breathing new life into the sector. Optimism is back, and hopes for a strong rebound in air travel are on the rise. The spark behind this surge? Delta Airlines. The company's latest financial report not only surpassed Wall Street's predictions, but Delta also boldly reinstated its full-year forecast. This move sent a powerful signal. Delta is confident about the future, and many now believe the airline industry's toughest days could be behind it. United and American Airlines quickly followed Delta's lead, with their shares leaping more than 12% in just one day. This dramatic jump has reignited faith in the industry's strength and its ability to overcome economic challenges. Investors who were once hesitant are now taking a fresh look, spotting new chances for growth and profit. Not long ago, the outlook was far less rosy. The industry was weighed down by uncertainty, pandemic aftershocks, volatile fuel prices, and unpredictable travel patterns made it nearly impossible for airlines to offer clear forecasts. Some even questioned whether certain carriers could survive the storm. But Delta's impressive results have turned that narrative around. The airline's ability to fill seats and post strong revenues shows that travel demand is bouncing back faster than many expected. Airports are bustling, flights are full, and the signs of a broader recovery are hard to miss. The good news didn't stop with Delta. Alaska Air and Southwest also saw their stocks climb, highlighting just how closely connected the industry is. When one major airline reports strong results, it often lifts the entire sector, boosting confidence among investors and travelers alike. This recent rally in airline stocks is more than a fleeting spike. It signals a deeper reevaluation of the industry's health and its ability to adapt in a challenging economy. As analysts keep a close watch, everyone's attention is fixed on the skies, eager to see if this upward momentum will last. One of the most significant factors fueling the recent rally in the airline industry has been the stabilization of travel bookings. After years of uncertainty and fluctuating demand, travelers are now returning to the skies in greater numbers, and booking patterns have become much more consistent. This renewed stability in bookings is a key reason for the airline industry's improved outlook. With more predictable passenger numbers, airlines can plan their schedules and resources more efficiently, reducing the risk of last-minute changes and cancellations. Delta's latest report highlights that booking rates have leveled off, making future demand easier to forecast. This predictability allows airlines to optimize staffing, manage fleet utilization, and streamline operations, all of which contribute to a healthier bottom line. Another major driver has been the decline in global oil prices. Lower fuel costs have provided a significant boost to profit margins across the sector, as fuel is one of the largest expenses for any airline. In fact, Delta reported an impressive 11% drop in fuel expenses this quarter alone, which played a crucial role in its strong financial performance. This reduction in costs allows airlines to reinvest in their services and pass some savings on to customers. Airlines are also capitalizing on the growing demand for premium services, such as business and first-class seating, as well as enhanced in-flight experiences. These offerings attract higher-paying customers and generate more revenue per seat. Additionally, loyalty programs have become a powerful tool for airlines. Delta, for example, has seen notable growth in both its premium services and its SkyMiles loyalty program, encouraging repeat business and building long-term customer relationships. By focusing on these high-margin revenue streams, carriers are building more resilient and adaptable business models that can better withstand market fluctuations and economic challenges. Another important strategy is disciplined capacity management. By carefully matching the number of available seats to actual demand, airlines avoid oversaturating the market, which helps maintain ticket prices and supports overall profitability. When you combine stabilized bookings, lower fuel costs, a focus on premium and loyalty offerings, and smart capacity management, it's clear why the airline industry is experiencing such a strong rally. These factors together have created a powerful formula for ongoing airline success. Delta's stellar quarterly performance exceeded expectations and signaled a strong industry recovery. The airline reported adjusted revenue and earnings above analyst predictions, despite recent market doubts. Delta's focus on cost control and premium revenue streams helped offset economic pressures. Growth in premium cabin sales and the SkyMiles loyalty program bolstered overall revenue. This balanced approach allowed Delta to reinstate its financial forecast and inspire optimism across the sector. Investors now look to other carriers, hoping they'll match Delta's results. Delta's operational excellence and strategic foresight have set a new industry standard. Not long ago, the airline industry faced turbulence as economic fears led to a drop in travel bookings. Major carriers, including Delta, United, and American, scaled back summer flight schedules in response. Harsh winter weather and a recent airline crash further shook traveler confidence and strained operations. These pressures caused airline stocks to decline and forced companies to rethink capacity plans. Airlines reevaluated routes, especially in secondary markets, to minimize losses. The industry's thin margins and high fixed costs make it especially vulnerable to economic shifts. Scaling back schedules was a stark reminder of the challenges airlines face, even post-pandemic. Quick adaptation became crucial for survival and future recovery. United Airlines responded to softening demand by retiring older aircraft and reducing capacity. Cuts targeted markets hit by government travel slowdowns and international boycotts. American Airlines made subtler adjustments, swapping larger planes for smaller jets at key hubs. This allowed American to maintain frequency while matching capacity to demand. Delta also reduced its summer schedule, citing overcapacity and weaker bookings. Each airline took a different approach, but all aimed to preserve financial stability. These strategies set the stage for a stronger recovery as conditions improve. Geopolitical events in the Middle East recently hit U.S. airline stocks hard. Military strikes led to flight suspensions, highlighting the industry's vulnerability to international conflict. Airspace closures forced costly reroutes and cancellations, shaking traveler confidence. Airline stocks dropped even as the broader U.S. market hit record highs, underscoring sector-specific risks. While tech stocks soared, airlines grappled with the real-world impact of global instability. Geopolitical risk shapes everything from route planning to insurance costs for airlines. The events underscored that airline success depends on more than just demand. It requires global stability. Investors remain wary of the industry's heightened exposure to international events. While airlines faced unique challenges, the broader stock market surged, led by tech. The S&P 500 and NASDAQ hit record highs, fueled by strong earnings and AI enthusiasm. Companies like Palantir and electric vehicle makers, Rivian and NIO, saw major gains. Meanwhile, consumer goods and telecom stocks experienced mixed results, highlighting market complexity. Estée Lauder rose on a bullish upgrade, while Intel fell after a weak forecast. This divergence shows the market is a collection of different stories, not a single narrative. Tech and EVs attract speculative capital, while airlines are judged on fundamentals like fuel costs and passenger volumes. Understanding these sector differences is key for investors navigating today's market. The market's recent moves highlight the varied fortunes of major companies, painting a vivid picture of how quickly the landscape can shift in today's fast-paced economy. Investors and analysts alike are watching closely as some companies soar to new heights, while others face unexpected turbulence. American Airlines, for example, recently cut its financial outlook, leading to a sharp slump in its stock price. This downturn stands in stark contrast to Delta Airlines, which has managed to outperform expectations and deliver strong results. Delta's stock has been on the rise, reflecting investor confidence in its strategy and execution. The story is similar in other sectors. In telecom and media, Charter Communications saw its stock fall after reporting subscriber losses, signaling challenges in retaining customers. Meanwhile, Centene Corporation, a major player in healthcare, managed to rebound after a difficult quarter, showing resilience and adaptability in a competitive market. For travelers, these shifts mean changes in the flying experience. Airlines are increasingly focusing on premium cabins, offering more perks and exclusive services to high-paying customers. However, this also means that last-minute deals and affordable options are becoming scarcer, impacting budget-conscious travelers. For investors, it's crucial to look beyond broad industry trends and dig deeper into how individual companies are executing their strategies. Strong leadership, innovation, and the ability to adapt to changing conditions often make the difference between success and failure. Delta's strong brand reputation and diversified revenue streams have helped it weather industry challenges, setting it apart from competitors. In contrast, American Airlines' ongoing struggles highlight the risks associated with high debt levels and intense competition, which can quickly erode profitability. Ultimately, the airlines that can best manage their costs, invest in operational efficiency, and remain flexible in the face of uncertainty will be the ones that thrive in the long run. Strategic decision-making and adaptability are more important than ever. The current news is about much more than just daily stock prices. It's about the ongoing strategic battles and bold moves that are shaping the future of air travel. As the industry evolves, the winners will be those who can anticipate change and respond with agility and vision.